Thanks for tuning into the Finance News Network. I'm Jessica Amir, and today I'm joined by Russell Investments Portfolio Manager Daniel Choo. Daniel, welcome to the network.
Thanks for having me.
So first up, let's just start with your outlook for investors in this current stage of the market.
We're at a critical juncture right now in terms of investment markets. Over the last 30 years, we've had strong equity market returns and also strong fixed income returns. But if you think about cash rates right now, where they're at 1%, compared to 10% that we've seen in prior decades. This means it's going to be harder to generate returns going forward, and we have to work our capital even harder as asset allocators.
So, Daniel, what do investors have to do to really navigate this type of market?
If we zoom into 2019, so I started with the super long term, let's zoom into 2019. We believe we're in the late cycle. It's been 10 years since the GFC, the global financial crisis, and we right now believe that we are in the late cycle. Valuations are expensive, there's uncertainty, there's higher risks in the market. So what we're doing in our portfolios is to make sure that when we find opportunities, we invest in them with conviction, but at the same time, when it rallies, that we take profits. And we do that again and again and again in the late cycle until the signals change.
Now I'd like to dive into the Russell Investments managed portfolios. How do they benefit investors, and tell us about the offering as well?
So the offering itself, the managed portfolios, is one in which we've well researched. We've spent a while now, we've been patient in building this product, and we believe it can really benefit investors. The product itself has three different components: an Aussie Equities Direct portfolio, in which our portfolio managers, the Aussie equity specialists, have hand-picked stocks depending on the characteristics of these stocks. For example, we favor stocks that are cheap, that have good quality in terms of their balance sheets, that have positive sentiment and can do well in uncertain markets. Stocks like BHP that have strong momentum recently and are still relatively cheap and have commodity support in terms of spot prices are kind of the stocks that we select and pick. We've also overweight banks right now due to the yield, and the ability to pick up on that yield in a low interest rate environment is important for us. Then moving on to the next part of the portfolio, it's the dynamic real return strategy. That's really the engine of the portfolio. I talked about this responsiveness in the late cycle. This engine is able to react and respond to the different parts of the cycle. And again, we're in the late cycle. And then thirdly, we invest in passive ETFs. Think of these as completing the portfolio. There's a completion part. We want to invest in fixed income and equity markets, as well as different regions and credit markets, and we'll tilt between these.
So thanks for the thorough explanation, but maybe you can tell us what really sets your solution apart from its competitors and others in the market.
So the uniqueness of this strategy is that we're able to take three components, put them into a total portfolio, and then plug and play into our global process. So we've been running active multi-asset funds for many decades now. And so being able to bring this to the Australian market as a standalone product is something we're proud of. It's well researched, it's backed by capital market research, asset allocation research, as well as active manager research. And what we've been able to do is really finesse this product. An example of this, and what we really want to bring, is this responsiveness as well. That's another unique factor. The dynamic real return strategy that sits at about 35% across all four models is able to respond. I'll give an example of this. So in 2016, as an example, for the dynamic real return strategy, we invested in high yield bonds which were heavily discounted. So what we did is we added 20% to the real return strategy. Sticking to our disciplines, when it rallied, we then sold it and took profits. And this was a way of managing the responsiveness to the market.
So advisors are increasingly using solutions like yours to structure portfolios. So for advisors in the market, how are they going to use your solutions to do just that?
Yeah, we want to really partner with advisors. We want to bring them on a journey. So for example, we talked about the regime and being very regime aware. We want to be able to communicate where we are in the regime, what we're going to do in this regime, but also communicate where we're heading to in terms of the next regime. The structure itself for the managed portfolios are tax effective, cost effective, as well as transparent. And we're building this at a compelling price point.
And just lastly, Daniel, before we let you go, what can investors expect with Russell Investments managed portfolio?
With Russell Investments managed portfolio, there's a real alignment of goals for investors. Over the next cycle, we believe that returns will be lower. So we've got to work that capital harder and be able to add more value. That alignment is something that we're really proud of in terms of our process. We've purpose built that. we believe that we've got a dedicated global team that stands and backs and supports this product. And as a result, we're proud of bringing this to the Australian market.
Wonderful. Well, thank you so much for your insights. It's been very informative, Daniel Choo.
Thank you very much.